Once again, good morning, everybody. My name is Kylan Hayes. This is going to be Smart Money Monday. The day is November 2nd, 2020. Lots of stuff going on, so let's get into it. First of all, I just want to say, I woke up this morning. It was really nice outside. It was 61 degrees. The wind is blowing. I just want to say, be sure that, we all got Forex stuff going on. Be sure you're just really taking time to step away from the charts and just enjoy what's around you. Because if you don't enjoy what's around you, this is all for nothing. I know I'm just kind of going to a speed, but I do with all my calls. Be sure that you're taking time away from the charts to really enjoy other things. That way you know that you were not addicted to Forex. But again, dang, in the middle of my speech too. That way we make sure that we are not, addicted to charts, which it sounds crazy. It exists. Just to be sure that you can take a step back and really enjoy something. This actually activates what's called serendipity. It's a term I learned in class. Yeah, I'm throwing my college stuff to y'all. It's when serendipity is that feeling when you're just walking around, just looking, all of a sudden something clicks in your head and everything makes sense. When you step away from the charts and you're off doing something else, it's very often, it's happened to me, it's happened to other people, that something's gonna click. You're gonna be like, oh my goodness, smart money. I know how this works. It happens all the time. It's called serendipity. That's the reason you gotta step away. But enough of my spiel, I'll get back to that later. Let us get into smart money. So here's what we're gonna do. Somebody give me a pair. Actually, no, not yet. I'm supposed to be showing y'all how to do this. Sorry, I got a little ahead of myself. Y'all let me go ahead and start asking questions while I'm looking for an example for y'all. I should have had this up. That's my fault. Y'all go ahead and start asking me questions y'all want me to go over. Y'all ain't just gotta talk. Can I break down AJ? So AJ, there's a thing about breaking down pairs. You cannot just break down the overall pair. Why can you not break down the overall pair? Someone tell me. I've gone over this before. Not trying to call you out. I just want someone to make sure everyone else is paying attention. Someone tell me why you cannot just go over the pair. Elijah, Brian. I know y'all know. Someone say it.
What was the question?
Why can you not just study the pair? Oh, this is nice. All right. Here's why you cannot just, let me see if someone said it. I look at AD.
Somebody said something.
Here's why you don't just break down a pair. Because pairs change. For example, today is November 2nd. Tomorrow is the United States election for the president. Volatility is high this week. Things are going to change. So you're going to see behavior on these pairs that you are not going to usually see. This is why it is important that instead of studying the pair, you study the technique. That way, no matter what happens in the news, you know how to recover. You know that you're going to continue doing what you did before. Nothing else is going to be new. Does that make sense? You're having trouble finding ballot breaks and OBs? All right. Daniel, we'll go over that again. All right. So first of all, this is Smart Money Monday. For those of y'all who are unaware, smart money is the method that the institutions and the banks use. It is how we identify where they're making their moves and enter with them. On the other end, you have what's called retail trading. That's where you use indicators, support and resistance, EMA, Bollinger Bands. That's where you enter based on all this stuff. However, that is the 96% of traders who fail. The 4% are the ones who know how to ride the trails to the banks to find out where they're entering, because they are the ones who move the market. Smart money is going to teach you how to ride the trails of the banks. There are 3 confluences for smart money. Y'all take some notes, note takers and brand makers, and I'm going to have some other people who have been in these calls before tell me what these confluences are as I explain them. So, Elijah, Brian, I know you know. I want to get someone else. Let's see. I love cold calling y'all to make sure y'all are awake. Daniel, what's the first smart money confluence?
Liquidity.
Liquidity. There you go. All right. Actually, I'll do this. All right. So the first smart money confluence is liquidity. Liquidity, that sounds like a big word. It's simple. Liquidity is what retailers refer to as support and resistance. So looking right here, this area right here, look at all of this. Look at how price comes up repeatedly. It is the same area. This is support, right? This is not support. Someone tell me this is support, right? Y'all see how this is support?
That's resistant.
Okay. Resistance. I swear I always get those two backed up. Yeah. Resistance. And then support gonna be in the bottom. Thank you. But y'all get the point. Why is this important? This is important, not imbalance. This is important because what is above this resistance? Someone tell me.
Stop losses and buy stops.
Stop losses, buy stops. So what retail traders are thinking is going to happen is price is going to come back up the zone and shoot down. What's above the zone? Nothing but stop losses. When people get stopped out, we make money. Write it down. When people get stopped out, we make money. So that's the first confluence. Liquidity. Someone give me number 2.
Impulse.
Impulse move. Now, what is the impulse move? Let's think. So we all know the support and resistance has to eventually be broken. Isn't that correct? That is correct, because if support and resistance never got broken, well, then retail traders would be billionaires right now. And well, yeah, that would be that. So we know that the support resistance has to eventually be broken. And when it's broken, it's often a dramatic move that'll slam right through it. That is what is called the impulse move. So this one is actually kind of a unique pair because not only do you have an impulse move going above the liquidity, but you have it going back into it, if that makes sense. That does not make sense. Let me be more clear. So you see how the liquidity gets broken by this move, this large move up, right?
Mm-hmm.
All right, and then it slams back down, back past the liquidity. This was a kind of weird example because it breaks through, but I found another example that's going to make more sense. That's the impulse move. The impulse move is what breaks the liquidity. The liquidity being support and resistance. So the impulse move right here in this area. Be sure to write this down, screenshot. Y'all need to know this. This is crucial. All right. And then what is the last confluence of smart money?
OC, OB.
OC, OB, area of interest. What does that stand for? Outcome candle. Here at outcome reach, we call it outcome candle. See how I did that. So, but you'll see outcome candle stand for OC, OB, area of interest, ideal entry area. It's all the exact same thing. Outcome candle. So, what does an outcome candle look like? Well, there are 2 ways it can look. I know I love my purple, as y'all can see. There are 2 ways that the OC can look. It's always going to be an engulfing candle. Y'all remember what the engulfing candle chart pattern looks like? If you don't, I'm about to show you. This is going to be the down move. I'm trying to match the color scheme I already got going. And this is the up candle. That purple. Love my purple. That does not look different. Let me change its color right here. I'm sorry, I'm being nitpicky. The designer and me coming out. Yeah. So this is going to be a sell OC, in which this is easy. All you do is you're going to put your sell limit right there at the bottom, stop loss right there at the top, right? Now, the other type is going to be the exact opposite of the buy OC. Remember, it's always engulfing. That means you're going to have your, how am I going to do this? Let's see. Okay, your drop right here. And then, dang, y'all joined a little late. And then you're going to have your rise right here. That's the buy OC. Ooh, looks different. Okay. Is this not also Wyckoff? We will get that in a second. How do we find trading range and get directional bias? I'll get that all in a second. So this is the buy OC. In that case, buy limit right there, stop loss right there. Same thing. It's just backwards. So can somebody annotate and circle where the OC is in this example? It's always going to be right before the impulse move. So someone circle it for me. One time I'm letting y'all mark up the screen. Close, but not. That's not the one I'm going for. Yes, I can see writing on there, but that's actually not the one I'm going for. So could you erase that? Yeah. I'm actually going for this one up here. You see how this small candle is engulfed by the big one? This is kind of a bad example, but I'll go for another one. So in this case, remember, it's an engulfing candle. You're going to put your sell limit right there, stop loss up here. What's next? Someone say it. What's next?
Set your limit. Go about your business.
Set your limit. And I want everybody to write this down. Everyone on this call, please write this down because I keep seeing people mess up with this. Set your limits. Go about your business. I'm kind of forcing it around, but y'all get it. Set your limit. Go on about your business. What do I mean by that? The number one reason people mess up with Forex is because of impatience. Set your limit, go about your business. That's right. People mess up because they are impatient. They will try to force these trades because, you know, they see other people, at least Instagram people. Do not believe Instagram traders. I'm just going to throw that out right quick. People will see Instagram traders every day posting, oh, yeah, plus 200, plus 2,000, all this stuff. In reality, you're not going to catch trades like that every day. Patience is the game, all right? You got to set your limits and you got to go about your business and let price go up and hit that limit. Because if you try to force these trades and get in them soon, you're going to lose money. And I promise you that. You're going to break it even. So when I say set your limit, go about your business, that means put your limits, get away from the charts, trust your analysis. So at this point, I'm at the park doing my thing. I don't care. Walking dogs, eating bagels, something. Easy. Look how price came up and touched that and shot down. And here's the best part. Y'all ready for this? Look at this. What is the risk? 8 pips. How much did it go now? 189 pips and it's still falling. So you see, with this risk to reward, you can't lose. You can lose 5 trades and you win 1. And you will still be in profit for the week. Someone tell me if that makes sense or if it doesn't.
Makes sense to me.
All right, let's find another example. Then I'm gonna go over some of the questions that you all have. Someone pick a pair. I'm feeling, I'm gonna let y'all decide.
EJ.
EJ, why you like EJ? Okay, I hate that pair, but I'll go.
Why?
I cannot stand this pair. This is once you trade a lot, you're gonna have pairs that you hate. I hate EJ. I hate EG, GN, GJ. I cannot stand those pairs. GN is the worst pair in my opinion. I hate it. I mean, they try to move barely, and it's like 80 pips. Whenever I'm backtesting, I don't really see OC plays play out that clean. Okay, don't worry, Daniel, we'll go over it. And I actually do a little refresher backtesting thing since I got time today. Y'all keep asking questions while I find y'all an example on this very, let me get off this 3-hour time frame. That's something I should do. EJ look weird right now. EJ looks weird all the time. I'm gonna willingly discriminate against that pair. I hate that pair. I'm sorry.
Haters everywhere we go, man.
AJ. These pairs, I mean, it's easy to find these things, but it's like when you're actually looking for them, it's like, whoa, where are they at? So I apologize for the wait. Okay, this works. Actually, that's not working like I want to. It's kind of a short one. Next, for these next calls, I'm gonna start having these like picked out in advance, so I ain't gotta keep having y'all waiting like this. This is unprofessional. So
I see. Oh, never mind. That's not one.
No, I saw what you were looking at right there. I don't know where it went. Right? No, it's a bad example.
Epic.
Probably because this is EJ. That's why it's taking me so long to find this pair. Here we go, right here. This works. Actually, not like I want to, but you know what?
Oh.
Actually, this is an example of one of the quicker plays. So this, yes, it's actually a good example. So that pair I just showed y'all, it obviously went very clean and it lasted a very long time. You're not gonna always have those. Oftentimes, you're gonna have them last like half the time of that. So let's go over it. Someone give me, what's the first confluence?
Liquidity.
Liquidity. What is liquidity? Someone tell me. Oh, y'all are chatting like crazy. I'm sorry. Elections, effects on Forex. Yeah, we'll go over all that today. Actually, I'm wasting time. Let's go and get into this. All right, so liquidity. Support and resistance. Look at all these wicks right here. Y'all see, this is a triple top. Isn't that correct? What's a triple top? What's above this triple top? Some people, sadness. For us, happiness, because someone got stopped out and we got the opportunity to make money. So what's above this? Joy. Stop losses. Thought that was a double top. 1, 2, 3. So what's number two? That you got your liquidity. What's number two?
Impulse move.
Impulse move. Look at this right here. Bam. Slams out the liquidity. That's your impulse move. Number three. Someone tell me.
OC. Outcome candle.
Outcome candle. Right there. Buy limit at the bottom. Buy limit at the top. Stop loss at the bottom. It'll be the opposite if it's a sell. This is the buy one. Then, what do you do?
Such a limit.
Going back to business. Why is it an OC, Richard? Check it out. Look, I'm zooming. I know I'm a little bit zoomed out. Look at that. Isn't it engulfing? Doesn't it follow that impulse move that breaks out liquidity? No, Brian, not that high up.
Sure.
Right here.
Yeah.
Yeah. Actually,
That's for the right now, like the current date
not yet. I'm still going over
on
this.
EJ.
Nah, we're not going over that yet. I'm gonna finish this first, but I will get to it.
Because I'm a little confused. All right.
Yeah, I'll get to it. So then you're going about your business. This is actually one of those examples. Remember how price is not, it's going to keep going in that direction. So let's see what happens. This is a long-term play. Richard, can you erase that, please? Thank you. This is a very long, this is taking days. So that's why I say you got to have patience with it. Shoot, did it go yet? There it goes. All right. Notice.
Sorry. Yeah. I was trying to ask why that one, not the one to the right. I was trying to circle it.
This, oh, not this one?
Yeah, because isn't there another icon kind of right that's close to the one you have pointed out?
Yes, but I would go with this one. And why would I go with this one? You have liquidity right here. That's actually a really good question. You got all this liquidity right here that needed to be broken. This outcome candle broke all that liquidity. And because it broke liquidity on both sides, it has higher probability. Make sense?
Yeah, thank you.
All right. So now, notice how price came right up here and it went up, but then it slammed right through. This is why one of those examples of how price is not going to just always keep going in the direction like I said it was, or like it does in some case scenarios. This one, price went up 200 pips. Don't expect price just keep flying up. That's why we have take profits. Where do you put your take profits? That's something I'm not going over yet. Someone tell me.
Equal highs.
Yep. You have three options. First option is what some people do. They'll have like, oh, I'm just going to shoot for this many pips. Not my favorite option. Let me tell you why. You always want to go with what the market gives you. So the other two better options, you can put your outcome candle, you can put your take profit on another OC, or you can put your profit on liquidity. I put my take profit on liquidity. So if we were going back, the moment I see liquidity right up here where all these equal highs are, that's where I would put my take profit. And as you can see, if you just extend this line all the way out here, price hit that and it failed. That would have been my take profit. So the risk, 26 pips, price went up, 157. Easy. That makes sense? Yes, no, maybe.
I thought if you had liquidity above, you would look for a sell.
Say that again.
I thought if you had liquidity above, you would look for a sell.
Above and look for a sale.
Yeah. Like see how go back to the left?
You can circle the screen, by the way. Don't feel free to do that.
Oh, for real? No, all the way to the left where you drew your line with the liquidity.
Oh, right here, where it's like right here.
Right there.
Yeah.
Yeah, I thought you would look for a sell around there to the left.
You can. You don't have to. I'm shooting to take profit. I'm not trying to like hit take profit and instantly jump back in something else. Now you will get plays like that. I call them like ping pong plays. They just like go bounce with the OCs. You're not gonna always find those. Yeah, so it does. Fighting in real time. Yeah, you should be back testing more than you should actual trading. But let me actually go over some of the questions y'all had earlier. I know y'all had some good ones. All right, stuff. Election effects on Forex. Yeah. So tomorrow's US election. I know those y'all are going to be watching this recording in the future. It's still nice to know. The U.S. election is going to be potent on the DXY. DXY is the dollar index right here. All right. And remember that DXY and EURUSD correlate inverse. So whenever DXY is going up, EURUSD is going down. Whenever, questions how, yeah, I'll go over that. Whenever the US election occurs, Matt can break this down better than I can, but depending on who is office and how taxes are raised, that is going to determine whether the value of the dollar goes up or down. So right now, I'm avoiding EU for the simple fact that it's so volatile right now. You know, people are watching this election and determining what they're going to do, so it is extremely volatile. So right now, as today and tomorrow, I do not recommend trading EU. Afterward, when we know who is in office, Matt can explain that better than I can. So I'm gonna ask him if he can send something in the chat again about it. That is when you're gonna know the directional bias of EU. But as far as its effect on all other pairs, if it's a USD pair, if it's a major, it's gonna be extremely volatile. So just know that the spreads are gonna be very high. So that's that. Make sense? Hello, makes sense.
Yeah.
All right. How come we don't use fibs? Yeah, that's actually a Dylan and Matt question. Yeah, I actually never did get the gist of why we don't use them. I just know that we don't. So I'm gonna let Dylan and Matt explain that one. All right. Whenever I'm backtesting, I don't see OC plays out that clean. All right, yeah. So what you have to do in your backtesting is you got to go through, you got to realize it gives you this realization that you're not going to have that many clean pairs on a daily basis. My weekly pip target is usually about 100 pips, give or take. That's my target for the week. So I'm not aiming for 100 pips a day. Therefore, you're not going to see all these clean plays every 5 seconds. But when you're back testing, you're going to be looking for these clean plays. You're going to be looking for why they're clean. Look at that DXY play right here, just eyeing it. And really, when you back test enough, you're going to be able to just eye pairs and say they're going to work. And when you back test enough, you're going to be able to know when a pair isn't going to work. That's why sometimes y'all drop charts in the chat and you're like, this isn't working. I can look at it and say, no, yes. Because I've back tested so much that in my brain, I can just eye a pair and tell you when it's going to work. That's what you're striving to do. You want to be able to just eye these charts and know when a pair is going to work. So when you back test enough, you're going to be able to just instantly see them. Does that make sense? Answer your question? All right.
What do you do? My bad. What do you do when like if you find one like on a lower time frame and the stop loss is too small? Because you put your stop loss on the top of the OC. You just make it bigger.
Stop loss is too small?
Yeah, like I saw one where you had like a 6 pip stop loss.
That's not too small. You want small stop losses.
Oh,
if you get a small stop loss, that's what you want. Now, at the same time, on the other end of that, you don't want to keep going to the smaller time frame, trying to make that stop loss smaller and smaller. If your stop loss is 20 pips, go for it. If it's 6 pips, go for it.
People like they like to scalp and use smart money like on the 5-minute chart.
Yeah.
And that'll always be like small stop loss. So that's if you just roll with that.
You can roll with it, yeah, because you can have small stop losses, but you're also gonna have small take profits. Why am I starting so bad? Like for example, that's iffy. This is probably like a 7-minute time frame. But this one, your stop loss would have been 3.8 pips and went down about 24 pips.
Mm-hmm.
That's how you count these. So you're gonna get small stop losses, but you'll also get small take profits. That's just all about scalping. So don't let that throw you off. All right, next question. Trading ranges and get directional bias. So directional bias is all about, there are many ways to do this. I know Dylan has once used EMA lines. I don't use EMA lines. What I do is I go to the higher time frame and I just kind of eye it, to be honest with you. I just see, what direction the trend is going, and I'm making sure that I'm trading for the most part with the trends. And the other thing you gotta look out for is Wyckoff. But that's for another call, because this is a smart money call. But Wyckoff is the highway. Wyckoff is going to take price where it's going to go. Smart money is the ramp to get on that highway. But that's for another call. So I'm going to leave y'all with a little bit of suspense. More questions? All right, give me some more questions, or I'll find some more examples if y'all want. I got time today. Let's get it.
So like, I had a question about, I think it was GU that I hit my stop loss. So like with momentum, with GU, with momentum, if you have like high momentum, is that a good indication that you can like anticipate a breaker play? Like if it's a valid OC, but it just strikes right through?
Not necessarily. So whenever you see high momentum, meaning, your price is approaching your OC, it's just like it's going really fast toward there. That's when this actually goes into Wyckoff. You would go into the lower time frame and you would be sure that price is reversing. And if price is starting to reverse, that's how you know that there's going to work. If it's not, that's how you know it's going to get blown through.
Okay.
So be sure y'all check out Dylan's. Join some more of these calls this week. Check out Dylan's Wyckoff videos. I don't know if the mini course goes over that. I actually haven't looked at the mini course a whole lot. It might, I don't know. But the actual smart money course or actual outcome reach course will be dropping soon. And of course, y'all got to get in with that because I completed the course. It's got me where I am today. But the other thing is, y'all have to back test. I can yell at y'all all y'all want. I can scream, go about your business. If you're not going to take the time to back test, you're not going to get this 30 minutes a day, and the pips will come your way. How can we access the Wyckoff videos? Check out Dylan's YouTube. Dylan, type this in on YouTube. Dylan.
Is the course yet ready yet?
The course is not ready yet. The mini course is ready.
Oh, the mini course. Right.
Type Dylan Conrad on YouTube. He's going to go over that a lot, but the biggest thing where Wyckoff's going to be going over is in the course. So once that drops, but you can also feel free to drop questions about it in the Outcome Reach group chat. We'll answer them there. Ball as well, we'll answer both of them.
Hey, can you look at EA 1 hour? I had a buy, but it hit my stop loss. No, not ECAT. ECAT. Sorry.
ECAT. Yeah, I got you. ECAT 1 hour. All right. What's your stop loss? Oh, this right here.
Yeah. So I put it. Yeah. So I had to buy a limit right there, and it hit my stop loss. Is that not an outcome camp? Is that not a smart money move, or?
Go over. This is what y'all always do when y'all moves hit stop losses. Go over them. All right. So looking at it at first, it looks pretty good. Breaks through liquidity. OC breaks through liquidity. It looks good. So let's see why it didn't work. Check out the higher time frame. It appears in the higher time frame. Whenever you get stopped out, the first thing I do is go to the higher time frame because it hit an outcome candle in the bigger time frame. Oh, this is why. What do you see here?
Liquidity.
Yep. Look at all this right here. This ain't nothing but liquidity.
Shoot.
Almost look like this.
Price is going on a break of liquidity. That's all it is. Make sense?
Okay. So next time, should I just set my limit like to the left of the little candle over there?
To the left of the little candle? Yeah, I will look for a buy somewhere down here. And you be sure you check the smaller time frame to see that price is reversing. It's probably going to be like, let's check. You might be able to see a buy somewhere in here. Yeah, I don't see nothing clean. Yeah, you have to watch it for now. Price could come down to right here. Y'all see this one right here? This is a possibility, but that's going to take some time to get there. So I'll set alerts right here and I'll just watch it, see what happens.
Thanks.
All right, more questions. Let's hear them.
I've been trying to get down marking up inefficiencies.
All right, inefficiency. That's not really intro smart money. That's more advanced. So,
okay, so that's.
Yeah, but I can just find a quick example for y'all so y'all can at least get the idea in your head. Inefficiencies are fun plays. Whenever you catch them. Wow, right there. Look at that. I'm not gonna get too far into this. It's gonna confuse most of y'all. I can tell that right there. But look at the gaps in between these wicks with no markers to the left. That's an efficiency. You know what? I'm not even gonna go over that. That's gonna confuse y'all. Let's see. That's gonna be in the course though. I'll tell y'all that. All right, can I look at gold to create a triple bottom on the 4 hour and bounce off OC? All right. One, I hate gold. I'll tell you that. I don't trade indices. 4 hour. What that is. All right, you create a triple bottom on the 4 hour, but bounced off the OC. A lot of liquidity below. 1, 2, 3. Yeah. Okay. Yeah, long term, we're definitely looking to get taken out then. Actually, wait a minute. Wait a minute. Bear with me here. Ooh. You know, price actually might continue to go up. This is looking a lot like redistro to me, or reaccum to me.
Oh yeah.
Yeah. Yeah, so that's what you're saying. Price is probably gonna go like right down here and then shoot up. Well, that was clean. That was very clean. Okay. Yeah, I feel like price is gonna come up here, go down, then shoot back up again. EU, 3 hour, EUR USD. Okay, I'm only on 3 hour time frame. I love this time frame. Ooh, that is good. Right there. Oh, it's probably the 4 hour. Let's see it. Okay, that's good. Only thing is, you know, the elections tomorrow. This is EU. I mean, you can go for it without advise caution going for that, because yeah, but it's definitely valid. So just be careful about that. EJ 8 hour. And just for future reference, I'm not gonna be doing a whole lot of just checking y'all signals because I feel like that's not what this calls for. That actually already activated, and it's probably gonna be the 16-hour time frame. Let's see. Yep, right there. It's already activated. That was missed. That's gonna fall. Don't mark it XQ though. Just let it go. It was missed. Yeah. So if y'all have any like smart money questions besides just checking out your charts, let's hear them.
How to find trading range. Oh, did you already answer that?
Did I answer that?
How to find trading range to find OC.
Yeah, okay, trading range. How do I explain that? Okay, wait for Wyatt and Sean's call. They can explain that better than I can. So I'm gonna I apologize. I'm gonna let them explain that. I don't want to. I'll let them. They're better explain that than I am. So I'm gonna let those two. What's the significance of 16-hour time frame? Nothing. I just like it. Yeah, smart money works on every single time frame. So yeah, I just like it. Do you start on daily OCs to find the first that moves in 4 hour and 1 hour? Yeah, I move down if the risk is really high. But for the most part, most of the OCs I find, because I'm using the 3 to 4 hour time frame, do not go above 20 pips. So I just go them as they are. But actually, EU has an excellent example about this because I've been watching this, but I don't want to enter it because, you know, election season. This is a pretty nice OC, right? Right here. But look at this. Look at that risk. 35 pips. I don't like that risk. So in that case, what you would do is you go on the smaller time frame, and there is that exact same OC, except it's smaller. Go off of that one. 15 pips. That's how you do that. Easy. Any remaining questions? Once again, this call.
I just forgot my question.
Well, just a reminder, guys, you know, like I said in the beginning of this call, be sure that, yes, y'all are studying, but y'all are also finding time to do other things. That's just a lesson I learned from when I first started trading, because I used to sit in my room and I just sat in my room all day and went over charts. And I guess it's kind of helped me to get where I am today. but you also don't want to get burnt out. So just be sure that, you're taking breaks, you're really enjoying other things. Matt actually before, when I was actually going through the course, Matt used to make us delete MT4 on the weekends. He would make us, actually, then other times more dramatically, he would make us set our limits on Monday and delete MT4. That way we could not go in and start trying to adjust those limits. And yeah, it sounds crazy, but then you would open up your phone when the market opened on Friday and be like, oh my goodness, my account's up 20% because it ruled out the psychology completely. So be sure that you all step away from these charts. You're not obsessing over these charts. Yeah, that's one of the biggest things I can tell y'all. Are there any pairs that work better with smart money than others? No, they all work. But I will tell you the USD pairs are the cleanest pairs.
They're the best?
I wouldn't say they're the best because they all work the same, but you will find the cleanest entries with the
Okay.
Yeah.
Bet.
All right. Well, in that case, this call's about to drop anyway. So my name is Kylan Hayes. Once again, I'm going to drop my Instagram right here. Kylan S. Hayes. Feel free to follow me. Send me a DM if y'all have any questions. I will answer them. I love teaching with y'all, especially when y'all are willing to learn. What pairs do you trade? I trade every single pair. I do not discriminate, except if it's GN or EJ. I hate those pairs. But besides that, I trade them all. So yeah. With that said, send me a message if y'all got any questions. Drop questions in Vault, drop questions in Outcome Reach, and I will see y'all next time.
Appreciate you, Brody.